Welcome back. We haven't checked the markets in a bit. It's still not able to cross that 5182 mark, the Nifty. That's the previous high, and that's an interesting level to watch. About 20 points off that, but still not giving up at all. And the index comfortably above 17,300 as far as the Sensex is concerned. Breadth is decent, so no worries in terms of the gains. It's only levels that we are looking at. Let's shift focus to another mid-cap stock that's become very interesting, and that's Escorts. Rohtash Mal, the Executive Director and CEO of Escorts, joins us on the phone line. Mr. Rohtash Mal, if you can take us through really the sales picture. We are actually coming out of a poor Kharif, perhaps historically one of the worst Kharif seasons in a decade or more. What's the impact on the ground? Do you see it at all in on tractor sales? How are you looking at the Rabi sales picture for tractors?
Lata, let's begin from things did look bleak a couple of months ago. Now, if you see it as a direct correlation between tractor sales and food output, one would have come to a different conclusion. But given the fact that MSPs held up or were encouraged, and the fact that consumer spending did not go down in the rural areas, etc., the money in the hands of the farmer, aided and abetted by optimism, actually resulted in tractor sales going up. Okay. So we've been seeing growth over the last few months.
Rohtash, good afternoon. Could you just walk us through, compared to, let's say, last 3 months to now, how much have you seen input costs go up by, if at all? And in terms of pricing these tractors, do you need to offer more discounts, or are you able to increase prices? I guess I was just trying to figure out on the revenue side, on the input side, if there's been any increase or a percentage increase from, let's say, last quarter.
Yes, Ashu, there are cost pressures, marginal cost pressures building up. I think about cost pressures of 1% or so have built up over the last few months. At Escorts, we have weathered these pressures owing to fiscal and cost discipline in a very strong manner. And shall we say, our margins at the end of this quarter would be better than 3 months ago. Having said that, pricing is a matter where either you have opportunity and so on, and let us see as time goes by in the current context whether prices will go up.
Right.
We are able to maintain and improve our margins owing to cost management.
Rohtash, some of us who are not in the tractor industry usually look at tractors as one particular kind of vehicle, but there are various horsepowers out there. Could you tell us where or which horsepowers the demand is in, and where are you getting competition from? Perhaps the more unknown or the private side of the market, which is not so much the listed side but the private side, where perhaps they can make it cheaper, or maybe not the best quality but make it cheaper, and which horsepowers are really selling like hotcakes at the moment?
Two observations quickly. Growth has been secular across horsepower ranges. Number two, I do not see any other major trend change in the market in the last few months.
Okay, there are a couple of questions not exactly related to tractors. You remember Idea bought the mobile service provider Escotel from you, and that was what, 300 to 350 crore. Now those bonds are coming up for conversion. They become cash in 2010. What's the plan with that money? Is it about 100 crore that comes into your hand? Also, you have a fairly sizable amount of land at Faridabad. The market talk is that DLF is looking to take an interest. Can you clarify on both?
Lata, expansion plans are a subject of, yes, aggressive plans that we do have. These are a subject to be considered by the board before I make it public on national television. And as far as land is concerned, land is a valuable asset, but land is required to be kept for production. Our core business is farm machinery, and therefore there are no plans on that side.
So DLF rumor is wrong?
I haven't even heard it. I don't know where you've got it from.
All right. Thanks a lot, Sridhar, for joining us. Okay, we have to take a break, but the next section